Hey everybody, good evening and welcome in. We'll get started here in just a couple of minutes. Just give everybody else a chance to hop on in here. What's going on? No, welcome. Start sharing my screen here. Right. How are you guys all doing tonight? Hopefully everybody's having a decent start to the week so far. Nice. Glad to hear it. Yeah, I'm doing all right myself. I've had a little bit of a chaotic couple weeks. I've had multiple trips back to back. I've been doing a little bit of snowboarding recently, so trying to coordinate and work around that has been a little bit more difficult than I anticipated, but that's my own problem, not yours. But yeah, really good so far. Good evening here to trade. Nice to see you. Good, Avenger. Good to see you. Thanks for being here. I do apologize also for last week. I know some of you probably were expecting lecture on Monday. We were ready to go, but I realized a little bit too late that we forgot to announce the class. And I was like, oh man, I guess we should probably just pull the plug on it just to make sure everybody knows and is able to make it. So sorry if you guys were expecting class last week and didn't get it. That's hopefully we won't make that mistake again, but sometimes these things happen. We'll give it like one, 2 more minutes. I'll send another message letting everybody know that we're getting going, and then we will get started. Okay, starting. Do I have any open swings? At the moment, I do not. I do not have any open trades at the present moment. Mostly been interested to see how big tech fares through earnings. We got a pretty big week. And in general, the market's been kind of in a range for me. Leaders have some really good action, but names that are kind of fascinating me the most are really names that I can't get an entry in at this point. SNDK, obviously one of them. I mean, this is a true market leader at this point. I didn't enter down here at 240 like I should have, obviously, in hindsight. And now it's a little bit too far gone. Maybe I could have defined an entry here, but that would have been kind of challenging. Optical names have been doing pretty well also, kind of just to keep track of here. But yeah, when metals have been moving the way they were, SLV down almost 30% in 3 days, GLD with a similar move. It's just been easier for me to slow it down just a little bit. This move in metals is just completely abnormal. Um, so just exercising a little bit more caution than normal. And looking at the cues overall, the market's just in a range. So if you're not trading much right now, you're really not missing out on anything. It doesn't take much to see that this period that we're in now is a lot different than this period that we were in since April. These two are not the same. Very similar to previous consolidation, such as something like this. Yeah, the market just digesting the massive move higher it's made, in my opinion. So just not something to be super aggressive in, at least for me at Tootsie Roll. Is this real? Tootsie Roll is its own company? I would have never thought that. Wow, I would have totally thought that Tootsie Roll would be owned by like Nestle or something else. Huh. I just learned something today. That's pretty funny. Wow, Tootsie Roll has done nothing since the late 90s. That is not super shocking. They pay a decent dividend though, so that's something to write home about. Yeah, big dividend. They doubled the size of their dividend a couple quarters ago. There must have been a reason. Yeah, it doesn't look bad. It broke out a little bit today. All right, cool. We're a couple minutes after our start time, so let's get right into it. We got a lot to talk about tonight. It's a simple lecture in terms of the PowerPoint, but a lot of charts that we're going to get into. So I know it's been a little bit, like I mentioned earlier, when we had a little bit of a thinner group in here. I apologize that we missed the lecture last week. We were ready to get started and then realized we forgot to announce it earlier in the day, so kind of blew it. But we're back on our regularly scheduled programming. I just wanted to mention one upcoming change to the lecture schedule just for next week, and then hopefully we'll be back to Mondays. Next week, we're changing the lecture schedule up. So 1K is going to do his chart review or weekly session on Monday, and then we'll do the beginner's course series on Tuesday. And the reason behind that is because you have the Super Bowl next Sunday, which I didn't even personally realize. I'm not much of a football fan these days, but anyway, for those of you who are going to Super Bowl parties or watching on Sunday, we're going to switch the lecture schedule around for you. So anyway, that's just something for you guys to be mindful of. Let's recap kind of where we're at in this beginner's course series. So as a reminder, we're here on lecture 4, where tonight we're going to cover support and resistance. We're just rounding out this kind of first 4 weeks of introductory lectures. And as we continue on, things are going to start to build on each other more and more, and things are going to start to get a little bit more complex. Just as a quick reminder, some of the topics that we've covered, if you haven't had the opportunity to visit or watch some of our previous lectures. In lecture 1 in the stock options basics class, we talked about the basics of how the market works, what it is. We talked about the fundamentals of an option contract. So, what a call is, what a put is. We did a little introduction into the Greeks in our second lecture. So we talked about 4 to 5 most important Greeks. We talked about how they move options contracts, how they set the price of options contracts. Then in lecture 3, we covered the basics of candlesticks. So we talked about what candlestick charts are. We talked about what the candlesticks represent. And then we discussed a couple different patterns. And also, most importantly, we talked about the methods of determining if a candle is a strong candle, a weak candle. And that's going to be really important as we continue this lecture series, as we're mostly going to be focused on technical analysis. So those concepts will certainly be important. You think Here to Trade might have a question? Yeah, Here to Trade, do you have a question? Yeah, you are raising your hand. Yeah. Any question, Here to Trade? Okay, maybe not. Maybe he just raised his hand on accident. But thanks for letting me know, Avenger. And yeah, if you guys have any questions, you can feel free to just unmute your mic. You don't even need to raise your hand. Just interrupt me, tell me to shut up, whatever, or just throw it in the chat. Okay, no, all good, all good. Cool. Okay, so that's where we're at in the beginner's course series. And just as a reminder of kind of why we're here and the purpose of our beginner's course series, first main goal is to develop successful traders who can find and execute on the highest probability trades and act on those opportunities with confidence. Our main way that we're going to work towards that goal tonight is, is to continue to build the fundamentals of understanding strong levels of support and resistance. We're also going to talk a little bit about building a trade plan tonight and introduce that concept, which will help towards that execution side. And then secondly, we're going to talk about how to apply the techniques discussed in this course series. And that's going to be facilitated with any questions that I ask throughout the lecture, any questions that you guys ask, as well as a homework assignment that we have at the end. And please forgive me, I know I'm behind on the homeworks for prior lectures, and my goal is to get caught up on that tonight. I know it's not an excuse, but I mentioned it earlier in the class. I've been doing a little bit of traveling recently. I'm going to do some more traveling starting Wednesday. So just bear with me as I try to get everything done in my life. But again, not an excuse. It's my own fault. Okay, so let's talk about support and resistance. Like I mentioned earlier, as always, guys, if you have questions, comments, you can feel free to unmute, start talking, put them in the chat, whatever it might be. And let's talk about it. So first and foremost, we want to first introduce the concept of support and resistance, right? These are terms that you may or may not have heard before. So let's just start from the ground floor here. Support, the way I had defined it, is a level where buyers are prompted to purchase a security. And this was a definition that I came up with on my own when I first made this slideshow. It's not something that I looked up And the words that I chose in this definition are pretty intentional. Um, there's a couple of word choices that I made very purposefully. The first one is where buyers are prompted, and the second is security. Um, First is that level of support represents an area where we would expect buying, right? It doesn't mean it has to happen, but it means it's an area where in the past we've seen those buyers step in and buy a given stock or a given equity or asset or whatever it might be. And the second piece that I use is security, right? I didn't say stock, I didn't say option contract, I didn't say futures contract, but I said security. That's because support and resistance applies in a lot of different markets, right? We see support and resistance in commodities like silver, gold. We see support and resistance in crypto, obviously stocks, obviously ETFs, exchange traded funds, futures, all sorts of different types of markets. You can certainly leverage the ideas of support and resistance. And then secondly, right, the definition of resistance is generally the exact opposite of support, right? Where support is going to be our level where we expect buyers to step in. That resistance level is going to be where we expect sellers to step in. And a question that maybe you're thinking about is why do they buy and sell, right? Why are people buying and selling at these specific level? The answer is going to be everybody's maybe most or least favorite answer, which is it depends, right? We won't always, and most of the time, we won't have any clue why people decide to sell or buy an asset at a given level, right? Sometimes we could make some guesses. Like, for example, the market loves to buy and sell at round numbers. So, for example, 400, 500, 600, 700, 50, 40. Very generally speaking, you might see those levels act as some kind of support and resistance. Another thing that might be interesting to keep in mind is, for example, we might have seen large buying or large selling at that same level in the past. And that might correspond to maybe a valuation, maybe an area where a fund is just very happy with buying at that level, right? They might see value in a company when they buy at, say, $20 a share, right? So that's why they continue to buy at that level of support and resistance. Or maybe it's just completely random, right? Maybe, some news hit and people just decided to sell and that's why they sold and it had no real rhyme or reason to it. It's just the way it happened. So the point I'm trying to get at here is we might not always know the reason why a support level or why a resistance level exists. But the more important piece is that we're identifying them, right? We need to understand and identify where these strong levels of support and resistance are so that we can use those to frame our mindset when we're looking at different equities. So, for example, if a stock is sitting near a level of resistance, might not be the best idea for us to buy at that time. And if a stock is sitting near a level of support, it might not be the best idea for us to sell at that time. And obviously, there's plenty of nuanced situations where maybe the opposite makes sense, but that's going to be just the general rule of thumb that we start with. So on the right, here's just a very, very simple graphic of support and resistance, right? We're not even using a candles chart here. We're using a line chart. Our y-axis here is going to be the price of a given equity. Let's just say it's a stock for now to keep it simple. And the x-axis is going to be the date or time, just like any other stock chart. And the line is going to be the price of our equity. And you can generally see that this level of support is very commonly where the price of that equity bounced, right? And when we see that price of an equity increase in such a way, that means that buyers stepped in, right? We talked about this in our earlier lectures, where the market is really a game of tug of war, right? Where buyers are fighting against sellers constantly. Another way to think of the market is like an auction where there's people willing to pay, maybe higher and lower prices depending on anything, right? In an auction, the price is going to go up based on maybe the rarity of something or the value of something, or maybe somebody just shows up to the auction, they really want it. And sometimes people might not show up to the auction at all. People, it might be a rainy day and people don't want to go outside and participate at the auction, or maybe there's a lot of these things on the market, so there's no point in going to the auction to buy them. You can go somewhere else. So there's a lot of variables that are at play when we see the price of an asset move. There's probably thousands of them. But again, the important thing for us to identify is these levels of support and resistance where we see commonly buyers and sellers stepping in. So again, at that level of support, you can see very generally, we see that price bounce or increase off of that level. And then secondly, that level of resistance is generally going to be where we see the price of an asset drop when it reaches that level. And the most important thing to realize from this graphic is that a resistance level will turn into a support level or vice versa based on where the current price of that asset is. So for example, when we're trading below a given level, we'll just call it a key level for now, it's going to be called resistance, right? And when we're trading above that exact same key level, it's now going to be called support, right? It's two names for the exact same thing. A resistance level can be a support level and vice versa. And very commonly, we do see previous levels of resistance turn into support. A pretty great example of this is just if we look at zoom out on a weekly chart of the S&P, which is kind of messed up right now because of today's candle. So let me just fix that. I don't know what bug created that. But here, for example, if we just go and mark this weekly level of resistance, right, just very quickly, you can see here we came in and sold off this level multiple times, and then zoom into our daily time frame. You can see how price reacted when we came back above that level, right? You can see for a day or two, we kind of stuck right below that level, maybe wicked off of it a little bit, and then we broke above that level, used it as support, and we never came back, right? We haven't came back to that level since then. And that's a weekly support level. And let's even look at another one. Sorry, let me get 5 years of data here. This is going to be all the way back to our highs in 2021. You can even see this level on the weekly chart. Basically, you don't even need to zoom into the daily. Here you can see this was a level of resistance back in late 2021, early 22, and we came back to this level in late 2023. We broke above that level, broke back below it, and then eventually used that as support and move higher. And the most, I'll say, game-changing lesson that I ever learned on support resistance was actually from Shark. And he told me that when you're drawing support and resistance levels, squint. And the reason he said that is because it's not always going to be perfect, right? These charts of stocks aren't meant to be a science. Sometimes it's going to be more of an art. And as you guys know, art is imperfect. And in this case, right, you can see this level of resistance. We broke above it for a little bit and then came right back below. Once we were turning it into support, we broke below it for a little bit, then came right back up and never looked back. So there's going to be plenty of these situations where it's not going to be perfect, right? Just because we're trading below a key level doesn't mean we're going to reject it forever and sell. And just because we're trading above a key level doesn't mean we're going to hold above that forever. And that's where understanding a little bit more than just support and resistance can come into play. Like, for example, if we think about back to our candlesticks lecture and zoom in here, if we look at this bar right here, that's not a very strong candlestick, right? If you guys remember, we talked about strong candlesticks being, maybe a bull bar closing near its high or a bear bar closing near its low. This bar here isn't really all that strong. And once we learn a little bit more about volume, you'll also learn that that's not very high volume either, right? So this isn't a very strong breakout. And we have the same story told here, right? We have these two, generally weak looking bars. Buying volume is decreasing as we go higher, not typically a good sign. And we only get that, real nice sustained move higher when we get two sequential bull bars closing near their highs. This is on the weekly time frame, so this is going to be pretty significant. And again, ever since we got these two bull bars closing near their highs, we basically never looked back besides this one retest right here. And you'll notice it didn't come all the way down to this level. It came down to, right around these previous all-time highs right there, basically to the cent. And I know I'm giving, a lot of different information at once, but this is the last thing I'll mention before we go back to the PowerPoint and slow down a little bit. Kind of like I mentioned, maybe sometimes you should be squinting when you're drawing your levels of support resistance. To take that concept even a little bit further, sometimes individuals, instead of using levels of support and resistance, will use levels which are called supply and demand, which functionally are the exact same thing. Supply is going to be an area of resistance, right, where we expect sellers to step in. And demand is going to be an area of support where we expect buyers to step in. Instead of drawn as a line, though, those supply and demand levels are drawn as boxes or rectangles or whatever you want to call them, more as a zone, right? So it kind of has that imperfect nature of support resistance levels built into it. So for example, this might be a good supply zone, right? Another supply zone could be maybe something like this area right around here. And another good supply zone could be maybe something like this, something we're kind of trading around right about now. And you can kind of see how these are playing out on the daily timeframes, right? You can see this maybe potential supply zone, how this is looking like it's turning into support now. It's a little bit messy. But anyway, so that's a couple introductory concepts. We'll continue to build on those throughout the lecture, and this is going to be mostly a chart-focused lecture. This is basically my only slide. But I want to just take a quick second to address some of the questions here. So Ant asks, breaking over resistance doesn't always mean it will keep running up, right? Yeah, absolutely. The thing that I'll continue to reinforce about technical analysis is there's absolutely nothing that is ever guaranteed in markets. If you ever think because A happened, B will 100% happen, you are very sorely mistaken. And the best example that I could give with that is just in recent history, right? We're in a current administration where sometimes over the weekend, news can drop, and all of a sudden the market's going to react rather negatively by the time the market opens on Monday. For example, we might close really strong on a Friday and look like we're going to move higher. And then we see tariffs get announced, new tariffs, for example, over the weekend. And all of a sudden, Monday, we're down a percent, right? And if you're looking at the chart alone, you could never, predict something like that. It looked really strong. And all of a sudden, now we're gapping down on Monday. So just to be clear, just because something broke out doesn't necessarily mean it will be continuing higher. There's never a guarantee of that. But the important thing to note is that once we do get a strong break above resistance, certainly the probability will be higher that the price of that asset continues to move higher. A great example is looking at something like SNDK. This is, there's no way around saying that this is absolutely positively the stock of the last 2 years, really. Back in April of 2025, this name was trading $27. It's now up almost 2,500% at its current highs. And that's not to say that, oh, you should have bought a long time ago, but these are the sort of examples that we can learn from. And I know we're getting a little bit ahead of ourselves here, but even if we just draw a very simple level of resistance at previous all-time highs, we get this, decent rejection. And the very next day, we get a gap up with a bull bar closing near its high on basically, record buy volume. That's not a weak stock, right? This is a statement, right? This is buyers making a stand and saying very clearly, we want in. When we see a bull bar closing near its high above resistance, it's very evident that the name is going to move higher. And this is a theme that's continued to repeat specifically in this name and many other true market leaders. It can be very clear in hindsight, especially, but even in the moment when a name is, setting up to be an incredibly strong stock. And SNDK is an excellent example. If you want some study material after this class, look through it and find just all the incredibly strong breaks above resistance. There's so many of them. And if you're looking for something to study, this is, in my opinion, the stock to study. Maybe the only other one that comes to mind is LITE, but not even this compares. But anyway, that's a little bit of an aside and hopefully answers your question, Ann. So Braden says, how you have a question in different time frames, support and resistance will be different based on the candlesticks. I agree with you. Which time frame should you look at for scalping or swing trading? Yeah, that's a really good question. So for me personally, and I would say for most, I'll say, I don't know, most traders with experience, they're likely going to get their levels from the daily or weekly time frames, and not necessarily those in specific, but what I'm getting at is that in general, the levels that come from the higher time frames are going to have much more significance. And we covered this in our lecture on candlesticks. The reason behind that additional level of significance is the candles on the daily and weekly timeframes have much more data that go into making them. For example, a daily candle on this chart has, maybe 2, 3, 4, 5 million shares traded in volume. And if we look at the 5 minute, it's, 20, 30, 10,000 worth of shares traded in volume. And if you think about that, right, volume directly correlates to a dollar amount, right? So when I trade 5 million shares, that might be $50 billion. And when I trade, 10,000 shares, that might be, I don't know, $100,000 or something like that. And I know everybody understands the difference between those two numbers. So anyway, the most generally accepted way of finding key levels, at least from those who have mentored me and the research that I've done and a lot of the skilled traders in our group, is certainly starting from those higher time frames and using those higher time frame levels for all of your trade plans. So, for example, Dirty River or Clean River, whatever you want to call him, who's one of the best scalpers I know, if not the best, his levels all come from the daily. He's not really scalping based off of 1 minute or 5 minute levels. He gets his levels from the daily and then scalps based on that. And I don't know if I emphasize it, but I mean, he's one of the only guys who I've actually seen be long-term successful as a scalper. He's been doing it successfully in the group, posting basically everything he does for 4 or 5 years at this point. So you can't really argue with that. So anyway, that's my take on that specific question. And Sabrina, hopefully that response also helps to answer your question as well. But let me know if you need additional clarity. Yeah, you really don't like to hold over the weekend unless you have monthlies or something. That was a response from Ant. Yeah, that makes sense. Yeah, there's a lot of things that have been happening over weekends recently that certainly change the way the market looks. And yeah, Avenger MU's in the exact same category, certainly as something like SNDK, right? This is an absolute super stock, and one that I've studied in the past as well, and one that I was looking to trade. You can see my trade plan here, and yeah, clearly never took it, and yeah, 125% higher. But I would have got stopped out here. I would have had to re-enter probably here is where I would have re-entered. So it wouldn't have been that good of a trade for me. I probably would have sold some here and then got stopped out there. So anyway, yeah, super big bummer, right? It's painful to see that. CN, kind of another one, same idea, right? Got in here. I think I stopped out here and now continues to go higher. But you know what? It is what it is. That's why we study and keep looking to improve. So great questions, everybody. Let's keep rolling. I think I have another couple images on here. Yeah, so here's a kind of an example of translating the support and resistance from a line chart over to a candlestick chart, right? And there's a lot of different ways that I've tried explaining support and resistance, but I hope the visual examples are sufficient. But if you want, maybe another way to think about it, right? You could think of the overall price of a stock as, I don't know, like a car, right? It's trying to drive in one direction. And when it hits these levels of resistance, it's like a brick wall, right? If you crash your car into a brick wall, you're probably going to stop. Maybe you'll start rolling the other direction, right? You could think of that as a level of resistance, right? Really, all it is just an area where price would be expected to stall, maybe turn around. And as it continues to hit that level, probably would expect to see that continued amount of selling at that level. And you can think of support kind of like a trampoline, right? When price comes down into that level of support, generally speaking, you'd expect to see some kind of bounce, right? And you can see how that's worked. I just have a couple levels marked out right here. You can see what look to be, prior swing highs on this given asset, another swing high, and I'll define those terms in just a bit, another swing low here, and you can see how we responded to those levels in the future, right? This level of resistance turned to support. And this way of setting support resistance that I followed here is super, super simple. And I want to just illustrate it just live for you guys on the chart. And I'm going to correct this candle myself because this is just super obnoxious. 689.58. Let me fix that. 689. Yeah, I don't know what happened. Somebody had an accident. Okay, so let's just talk about, a very simple method just for starting to understand support and resistance. And this is also going to be a simple introduction into just trends as well. So we'll talk about this in more detail in the lecture on trends. But in general, a trend is formed of swing highs and swing lows, right? So what I'm going to do is just mark out the highs and lows of this chart that we're looking at, right? And this is just an approximation. There's certainly more highs and lows that I could be marking here, but I'm just highlighting them all out, right? Every time we set a new high, I'm marking that with an oval or a significant high and then reverse. And then every time we set a new low or recent low and then reverse, I'm marking that as well, right? So maybe that's a level and that one as well. And what I'm going to do now is just very quickly just blow through and mark just a couple levels just based off these green ovals. Again, just super quick, super rough, not really being approximate at all, just trying to get the point across here. And now you can kind of see how the pieces are starting to come together, right? As I start to remove these green ovals, you'll notice, again, all I did is mark swing highs and swing lows, and you can start to see how the pieces are coming together just like that. And to put it very simply, right, you might be wondering, well, why do these levels matter, right? Why do these levels matter? Well, swing highs and swing lows are almost points of like a climax, you could say, right? Where the swing high represents the best buyers could do, and a swing low represents the best sellers could do, right? So that's, when they got a real good pull in the game of tug of war, they were able to make this much progress in either direction. And they also represent key psychological levels in some ways, right? And I know we haven't learned this yet, and we'll talk about it more in the lecture on trends. But an uptrend involves higher highs and higher lows. So as long as we're below the previous high, in this case, you could reference this high here, we are technically in an uptrend. again, on this given chart here. And once we break above that previous high, well, certainly we're in, full bull territory or, a clearly bullish regime. So it's super common to see significant buying once we get a nice break above that prior high. And the same thing goes on the sell side, right? Once we get a strong break of that prior low, this is a great example here, right? Marking out a swing low. It's very typical to see, more strong selling. And you can see that's exactly what happened here, right? And this is just an excellent example to illustrate. Here we had a pretty clear not queer, swing low get put in, right? We have two pretty clear bounces off this level, maybe even three or four, if you look at a couple of those bars together. And then here, you can't argue with me on this one. Very clearly a bear bar closing near its low, right? You have a gap down, a bear bar, the low of the day is its close. And after that same bear bar, we saw another 10% of downside, which for an ETF like the S&P 500 or an index like the S&P 500, 10% of downside in basically 2 days is, a hugely unlikely event. But after we saw, a strong close below a key level, it happened. And similarly, right, we've already established that this level was a reasonably key level of previous support. You can see exactly how it turned resistance right here, right around here. And we only started moving higher significantly once we got a nice strong break on rising volume above that key level, right? So this was a really simple workflow of identifying support and resistance, right? I basically marked out the swing highs and swing lows, and that's it. And let's go ahead and do it again, just a little bit slower now that we've seen the end result. So let's look at something like, I don't know, Google. That's a good name. And let's just zoom out to the weekly, right? Let's start real slow here. And let me clean this up. So this is Google over the last 3 years. And what I'm going to do is focus a little bit on more recent price action just because it'll be easier to show once we get to our daily chart. So I'm going to mark a level right here, right around this 190 area. And again, for the purposes of just, speed for now, I'm not being super precise, but this ended up pretty decent, which is just going to be this 52-week high that Google set, right? And if we zoom out, maybe even a little bit more, we could see that this was actually an all-time high that Google set. And after it set this level, Google pulled back about 21%. So clearly, a lot of sellers stepped in after we hit this level, right? A 20% pullback, that's considered a bear market. So that's pretty significant, right? And I'm just going to go and mark our previous high as well, the one that we set in 2021. And the most fascinating part about this is two levels basically dictated an entire, almost a year and a half of price action, right? Here, we set a high up at that 190.43, and that pullback only ended once we revisited our level of support at this previous all-time high in late 21 of 151. So really fascinating, just first example to start off with, right? Two levels mattered basically throughout this entire almost a year-long period. And you can see, again, we revisited both these levels and we overshot them a little bit. Here we had what looked like a pretty strong break above, ended up failing. And here we had what looked like a strong break below and also ended up failing. And both of these, both breakouts and breakdowns, failed due to news. So if you look at the date right around these moves, right, this was going to be in early February 25, which if you remember, that's when tariffs were announced on Canada and Mexico, which started, the whole tariff situation, I guess, if you want to call it that. And this week of April 4/7 was when tariffs were basically ended or canceled. So funny to see how the news corresponded with these fake breakouts and fake breakdowns. And a lot of the times the market is going to do what's most painful to traders. And in this case, the most painful thing is faking a breakout and then faking the breakdown, destroying everybody's stop losses, right? Everybody clearly thought the support was going to be at 151. It wasn't. It was about $10 lower. And obviously after that, we all know what Google's done. So let's mark out a few more levels from this weekly chart while we're here. I'm going to set up a level right here at this swing high that we set. And then I'm going to set another one here at this little pivot we created there. And then I'm going to set another one here at this little high as well. And I'll also set one here as well. So all I'm doing now that we've broken out of this little base here is I'm just setting these levels of support or resistance, whatever you want to call them, just at these swing highs, right? And the question you guys might be thinking about is how do you know where to put the level, right? Do you put it at the wick or the body of the candle? For me, it always depends, but typically I tend towards starting with a level at a wick. Because for me, those wicks represent extremes, right? Those represent, real extreme price action where we had peak sentiment in either direction, which to me makes those levels a little bit stronger, right? That's when sellers step in super aggressively on these wicks of these highs of these bars. And the same thing goes for wicks on the lows. But in some cases, we don't have any, aggressive wick like this, and we just have two bodies close to each other like this. So this is kind of another example of a level that I'll pretty commonly take. And now let's just zoom into the daily really quick and see how these levels behaved. So again, just to be clear, I didn't rehearse any of this. I didn't plan for any of these levels. I just, you guys saw what I did, right? I took the levels off the weekly chart, and now we're looking at the daily. And just those last three levels that I marked formed incredible trades. I mean, truly, some of these are almost directly out of a textbook in some cases. It's pretty clean, and it's not always going to be perfect, right? But for example, this trade right here, right? This is going to be the very first kind of consolidation or base that we formed after the breakout, right? If you remember on our weekly time frame, we had a huge bull bar closing near its high, very clearly a strong breakout, and then we started consolidating a little bit. Then we zoom into the, not the 4 hour, the daily. We can see we basically just sat in a range for almost 2 months, which is exactly what you want to see before a strong move higher. We could look at thousands of charts, and you'll basically see that every strong move starts first with a range. Some examples that come to my mind recently, LEU and just the rest of nuclear stocks all started with a nice big base before moving higher. Even our metals like SLV, right? Nice volatility contraction pattern here. Before the big breakout, GLD, same thing. And zooming out, this was actually at least an SLV, like a 20-year base. I know I'm getting a little bit off topic here, but this sort of thing gets me kind of excited. Anyway, I'm going to try and not get too distracted and go back to our example of Google. So anyway, focusing on Google once again, right? If you remember, all of these levels were simply derived from the weekly chart, right? Very, very simple. We didn't do anything all that fancy. And a couple more things to like about Google as a stock, right? Obviously, it's benefited heavily from the recent proliferation of AI and related themes. Obviously, I'm sure many of you know that Google has certainly emerged as a leader in the space. About 3 years ago, a lot of people were theorizing, Google's behind, they're behind ChatGPT and OpenAI and Microsoft. And ever since really that point forward, Google's only gotten better, with their Gemini application. And I'm giving you guys a lot of context, but I'm hopefully also giving you a little bit of a window into the way you should be thinking about stocks, right? I know this is a lecture about support and resistance, but support and resistance is just a piece to the puzzle, right? Support and resistance won't matter on a name that's, weak or, just low quality. By all measures of the word, Google is a high quality stock, right? And it continues to trade the way you would expect a high quality stock to trade. Obviously, very clean uptrend higher, really nice respect of both support and resistance. And obviously, has moved significantly higher since. So, yeah, again, Sabrina's got a question on how I define it. So maybe I've gotten a little bit off track and I should revisit. So let's just go through this chart one more time, right? This is the weekly chart of Google. And the way that I'm just starting off defining support and resistance levels is simply by identifying previous swing highs and previous swing lows. And what I mean by swing highs and swing lows was where the chart reversed, right? So here, for example, is where the price reversed. Previously, we were moving up. At this point, we started moving lower. Here is a point where price began reversing. Here is a point where price began reversing. Here, here, and here, right? That's the basis for all of my levels of support and resistance. I'm looking for prior pivots. And the reason these pivots matter is because this is where what I'll call the momentum of a stock changed. This is when sellers took control from buyers or buyers took control from sellers. And the reason that we care about those points is because that's where people with big amounts of money are caring about trading a given stock, right? And we have to remember from our prior lectures that it's not, mom and pop who are moving markets. It's not you and I who are moving markets. It's funds with billions and billions and billions of dollars, amounts of money under management that, most people wouldn't even be able to comprehend, including myself. Um, and as a result, right, when those names are getting in and out of stocks, well, they leave their mark, right? It's kind of like an elephant in a bathtub where you look at it and it clearly something is different, right? And when you're trading with that amount of money, well, whether they like it or not, they have an impact on the way stocks move and the way stocks behave. And there's certain things that they have to do in order to mitigate their impact on the open market. But again, you can't hide a bathtub or an elephant in a bathtub. So all we're marking is those swing highs and swing lows. Right here, a swing high. Here is a swing high. Here is a swing high, right about there. Here is a swing high, and here is a swing high. All I'm looking for is where price started to change direction, right? That's it. Super simple. It took me just a couple minutes. And as you practice this more and more, you'll identify it even easier. That was on the weekly time frame. And now we look at the daily, right? You can see in general how clean this all was. And you obviously have to apply a little bit of your own discretion, right? You're going to maybe need to squint a little bit or maybe spend a little bit of time dialing in your levels to be a bit better than I just did, right? I kind of rushed through it there. But again, this is that first level here. Well, actually, even zooming out, let me get us a little bit more price action here. I know it's going to get small for those of you on mobile, and I apologize for that. So here, for example, this was our previous all-time high of the stock. All-time highs are always going to matter. Notice we sell at that level a little bit, kind of stall out, then we break above, and this level turns into support. The very next day, on this day specifically, you would never know this by looking at the chart alone, but this day, a headline dropped that Google Chrome was staying under Google's control. So the monopoly suit, I think that was filed in the EU or something, was dropped, and Google gets to keep their Chrome web browser. And the stock reacted super positively to that, rallied a bit higher, then started to consolidate. And again, sits in a range for a couple of months. And then we get basically the exact same pattern, right? I mean, these two periods, both here and here, look super similar to me, right? We have this level of resistance that price is unable to clear. Then it gaps up here and moves higher. And we have the same thing here. We have this level of resistance that price is unable to clear. We get a nice bull bar, then a gap, and then it continues moving higher, right? So once we clear that resistance with some kind of strong bull bar, that's when the move really gets going. Two examples with basically the exact same price action, right? Really, really clean here. Moving to the right of this chart, it gets a little bit less clean. I'm not going to act like this is perfect, right? And obviously everything's perfect in hindsight. I could very easily say, oh, you shouldn't have stopped out here because it would have moved higher. Super easy to say that in hindsight. But in the moment, it's not quite so simple. But that's what stop losses are for, right? And that's what trade management is for. Not every single trade is going to work out perfectly, right? Sometimes you might take the long on this decently looking bull bar above resistance. Maybe you won't trim anything the next day. You'll keep holding, and then you'll have to stop out here, right? Only for price to hit new highs just 5, 10 days later. But that's kind of the beauty of trading is, especially like people like you and I, it's super easy for us to go from, maybe fully invested on a move like this to fully stopped out on a breakdown, right back to fully invested on a breakout once again, or fully invested on a retest of the breakout as well. And these are all concepts that I won't get into too much tonight, but I just wanted to introduce that idea of trade planning and profit targets and stop losses because support and resistance is the cornerstone of all of that, right? If you don't understand support and resistance, it'll be very difficult to define a stop loss. It'll be very difficult to define entries. It'll be very difficult to define profit targets. So I know I've kind of gone on and on and on about support and resistance and about levels and about how to find them. I want to just kind of take a quick step back and check for understanding. This is our first lecture that I've had in this series where it's really not guided by a PowerPoint. It's just us going through charts and yeah, I want to see how everybody's doing, making sure things are making sense and everybody's able to adapt to this kind of different style of lecture. And if not, I would love to know, yeah, what I could clear up for you guys. So anyway, how are you guys feeling so far? Is this starting to make sense? Starting to click a little bit? What are your guys' thoughts? Braden says yes. Okay, good start. Thank you, Braden. Matthew's feeling good. All right, nice. Support and resistance is a fun one. It's one of my favorite lectures to teach and one of my favorite concepts. As you guys continue to practice, you'll just look at a chart and see the levels of support and resistance. And as you continue to prepare on a nightly or weekly basis, you'll start memorizing levels of support and resistance. And that's what you should be doing. You should be in a routine that's so involved in markets where if I asked you, okay, where's support for Tesla right now, for example, and if that's a stock that you typically trade and is on your watch list, you should be able to tell me, okay, it's 400 and maybe 427.50, and it hit 427.50 a few days ago, right? I would expect those of you who are really invested and really treating this like you should be, um, you would have that level of familiarity with the names that you're trading. But that takes time, right? And being able to look at a chart and see levels of support and resistance takes time. I'm not going to act like it was immediate for me. I've been going through this similar routine for going on, let's see, 6.5 years now. So it's not something that's built overnight. So you guys really have to practice. You got to really spend time in the seat, looking at charts, identifying levels of support and resistance before it starts to become automatic. And in this day and age, you could probably ask your chat GPT or something to double check you. I'm sure it's able to parse that sort of information, but it's good to not rely on that alone and for you to understand it yourself as well. So anyway, okay, let's swap back to the PowerPoint. I want to remember what else I had on here. I know I had like one other slide. Okay, just a quick introduction to stop losses and profit targets. Yeah, so let's just define this real quick. Um, I've mentioned it a couple times tonight. I just wanted to put some definition towards this. So a profit target is going to be a level of resistance where we would plan to sell some or all of our position. And I really don't like this example anymore. I probably could have swapped this out. But for example, on a name like Google, right, we're at all-time highs, so it's pretty difficult to find any kind of profit target now. But let's just say, for example, let's just clean this chart up a little and focus just on recent profit or price action. Let's just do something very simple and say this is our entry, break above prior swing highs. Usually I'll mark my entries as green, as you guys have seen before. And let's just say our first profit target is going to be prior all-time highs, right? So our entry is above prior all-time highs. Our profit target is at current all-time highs. And I'm just curious, let's just see how we reacted to this level in the lower time frames. Let's just see, right? This is a fascinating example even today. If you'll notice, right, and let's just get rid of this after hours data because that might mix things up a little bit more than I'm looking for. Let's get rid of that. So this is the 5 minute, and again, not the most perfect level, but notice how, let's just say, for example, this was our entry over here, even though maybe it isn't necessarily. And once we come into that profit target, we can see what things look like on the 5 minute, right? Really, really gnarly rejection off that level, first bar of the day. And we actually came back down to that entry. And again, notice on the 5 minute how we didn't really perfectly come back to this level. It's actually pretty messy. We held it for a little bit, we broke below it, we broke back above it. And reclaimed it and eventually moved significantly higher. And now this level of prior resistance has turned into support. So you can see how this day we got a really strong sell off this level. This day, not as strong of a sell, right? Here, when we reached this level, we dropped about 4%, pretty big. Here, we, basically we're at this level, we were about 50 cents off. So again, not going to be perfect. And we dropped 2-ish%, right? So a less significant drop. And here today, when we came to this level, we broke right above it, right? Just notice the difference in these two candles, right? This one and this one. They don't even look a little bit the same, right? One is a strong rejection off of the level, and one is a strong bull breakout, right? Bull bar closing near its high, bear bar closing near its low. Pretty evident that this is now the breakout that we're looking for. And even better, cherry on top is that we come right back into that level, retest it, and hold it, which is pretty cool. So that would have been, an example of how we might have responded to our profit target. And again, it's super easy for me to go back in hindsight and tell you, oh, your profit target should have been, right here, right at the highs perfectly. And while that is 100% true and your profit target should have been there, it doesn't do us any good to look at this in hindsight in terms of our future execution. However, it's important to study these examples because these things continue to repeat, right? I showed you at the beginning of the lecture a couple examples of, leading stocks, SNDK being one of them. Somebody in the chat, maybe Avenger, mentioned MU, also absolutely falls into that category. Whether you like it or not, these aren't the first stocks that have led the market higher, and they won't be the last. There's going to continue to be huge super stocks that outperform. I'm sure everybody remembers Nvidia through 2021, 2022, 2023, and 2024. That was a great example of a leading stock. SMCI, great example of a previous leading stock, right? It since has gotten much uglier, but definitely had its day in the limelight. So anyway, the reason that we talk about examples and we use this kind of hindsight analysis is because these examples continue to repeat over and over and over. And just like these examples continue to repeat, I also try to repeat myself as well to make it very clear that nothing's really ever new in the market. Things have all happened before, um, even all the way down to tariffs and pandemics and all that sort of thing. Well, that's happened before. We can look at the history of the stock market over the last 150, almost 175 years, and study that sort of thing. Okay, so I don't know how I started talking about that when we were supposed to be talking about profit targets, but I guess that's how things go sometimes. So again, a profit target is where we'd expect to sell some of our position, whether we're in puts or calls, or if we're shorting shares, that's where we expect to close some of our position. And a stop loss is a level of support where we would expect to cut our position if this level fails to hold, right? So for example, a good example of a stop loss could be on Google, right? So let's say our trade plan is getting long above a break above this level, right? Let's say that's the main reason we're in this stock. Well, if we are trading, if we're bullish on a break above this level, pretty damn sure we should be bearish on a break back below, right? So if I'm trading only on a breakout above this level, I'm stopping out when we close back below. And obviously, in hindsight, that was a horrible decision, but that's not always going to be the case, right? We have to trade our plan. And if the only reason we're in the stock is a breakout and we fail that breakout, it's time to go away. And for me, at least in this market, that's why I've favored a little bit more kind of these, I'll say, you could call them like a cheat breakout, or I don't know what you want to call them. Some people call them a low cheat, where it's not really a breakout per se on, a significant swing high, but maybe a breakout of a lower range gives me a little bit more of a favorable risk to reward in this market. That way I actually could maybe be trimming on this breakout and would be okay holding through a move like this potentially. But anyway, that's something that we'll get into a little bit more in future lectures. And some of you might be wondering, why does this matter? Why does a profit target and stop loss matter? Well, any trade we enter should have some kind of plan, right? And if we're traders focusing on technicals more than fundamentals, which is 99.9% of what's happening in this group, outside of maybe somebody like Tilio, we need to understand where on the chart our trade is valid, where on the chart it's a good time to start scaling out of our position, and where on the chart our trade is no longer valid. So for example, if our only reason we're in a trade is because it's in an uptrend, we should probably be selling if it confirms it's in a downtrend, right? Because the whole reason we were trading this thing is now wrong. And as traders, all we can do is react to price action. We can't predict what's going to happen. Nobody can. But you damn sure that we can react to what does end up happening. So anyway, a couple more lessons on trading with a plan. Example, I haven't seen this slide in a while. Yeah, I guess what I was trying to say is this is really more about habit building. Your day-to-day life in general, I'm sure you guys have plenty of habits where you maybe wake up, you brush your teeth, you go to work, whatever. Coming prepared to the market with a plan should be thought of in a similar fashion. When you come to the day with a plan, right, you can almost put yourself on autopilot where you don't really need to make conscious decisions about, okay, I'm going to turn left, I'm going to go to work, I'm going to stop at the light, I'm going to brush my teeth, I'm going to do this. You just wake up and you do it, right? It's automatic. And that should be your goal in trading as well, right? Because there's so many different stressors in financial markets, just from the money involved alone, but there could be volatility, there can be news, there could be things that happen when you don't expect. And obviously, in some cases, you're going to be losing some money. You might be in the drawdown. So there's so many different ways your mind can be distracted. And having a plan going into the day, knowing what stocks you want to trade, knowing where you want to enter them, knowing where you want to exit them, just helps reduce all of that to where you show up and all you do during the day is you click buttons. You don't even really need to think. And in some cases, you don't even need to click buttons. You just set some orders and walk away and move on with your life. And if they execute, great. If they don't, great, right? You've done all the work outside of the markets. So that can be the importance of trading with a plan. And again, as I've continued to allude to, we'll certainly have a much longer discussion surrounding this topic, but just want to continue to introduce this idea. And yeah, We obviously talked about a bunch of real market examples. So what I'm going to do is just focus on this last question. We'll summarize our class and then talk about the homework in our next class. So volume asks how I would typically set my stop loss. Right now, you set it at about 25 to 30%. Avenger replied to you and said your stop should be based off the chart, not a percentage, and I 100% agree with him. A stop loss percentage is kind of a good way to start as a beginner. It's an easy rule of thumb that you can follow, but unfortunately, the chart that you're trading doesn't give a damn how much you're down on your position, right? The chart's going to do whatever it's going to do, and when you're trading options, it's derived from the chart, not from your P&L. So my first piece of advice is always for people to develop their stop losses based on the actual price action of the stock you're trading, not your opinion. If you get stressed out at 30%, the market doesn't care, right? It doesn't care how you're going to feel when you're down that amount. Um, it's going to do what it's going to do, and you need to react to what the market's doing, not what your P&L is doing. And if you're consistently in situations where you're down 50, 60, 70% and not stopped out, that's an issue with your trade plan. And you need to make sure that the level that you're focused on stopping out at is much tighter than what you're currently planning for. So anyway, that's a concept that we'll continue to discuss in our trade planning lecture, and I'm sure it'll continue to come up in previous lectures, but that's kind of my initial advice and perspective there. And yeah, to Brandon's point, yeah, if you're trading with $1,000 account, great place to get started as a beginner, right? I'm not going to act like beginners are going to come out of the gate and know everything. They're not, right? You're going to need to learn. You're going to need to figure things out. And having a stop loss alone as a beginner, period, is much better than not. So if you're going to just if you're just going to start out with that, great, much better than nothing. But I'm hoping as you learn more, especially through these lectures, you'll start to come around and realize maybe I could do a bit better. So today we talked a little bit about charting some real meaningful and significant support and resistance levels. We also talked about just some definitions around stop losses and profit targets and why you might want to start considering them maybe a little bit differently. And the homework for tonight and this week is for you to review the daily charts of three stocks. And you could do more than that if you want. Um, I'd like you to draw at least two support levels and two resistance levels. You could look at the daily chart, you could look at the weekly chart. And if you really want, you could look at different time frames too. I don't really care too much. And I'm hoping you guys can at least explain or think through why the level matters, right? Is it a swing high? Is it maybe a round number like 400, 500? Is it just a place that we've rejected in the past and it's maybe not a swing high or a swing low? It's just clearly an area where sellers have stepped in. And I want you to think through, what are we doing in respect to these levels? Are we consolidating between them? Are we breaking above or below them? And the goal really is for you to start seeing these support and resistance levels and also for you to start contextualizing the price of a stock relative to these levels. So, for example, what I'd be looking for is on a name like Google. I'd be expecting you to tell me, okay, I got resistance at 340.61. We're breaking out, right? We're moving higher. We're in bullish territory at this point. So anyway, that's kind of example of what I'm looking for in the homework this week. You guys have been doing great. There's been more of you than I expected participating in it. So keep it up. These homeworks really are what are going to facilitate, true learning. It's one thing to be here. It's another thing to practice after. So I hope to see a lot of you guys participate in this one as well. And really, this is a habit that you should incorporate into your weekly routines and even nightly routines. So anyway, as always, guys, always a pleasure having you guys in these classes. And again, as always, please message me if you have any questions, DM me on Discord. I have made a promise to get back to you all tonight, so that's going to happen. But yeah, thanks again, everybody. As always, come find me for questions or comments. And yeah, appreciate you guys all. Thank you guys so much for being here. I feel like I say it every time, but these classes would not be very cool, at least for me, if I was in here alone and recording. It's so much better to have you guys engaged and asking questions. And yeah, it's just great to see you all week after week. So thanks again. And I'm looking forward to our next class on price action and volume on Tuesday next week, everybody. And enjoy the Super Bowl if you're planning on watching it or going to a party. Don't get too hammered. All right. Cool, everybody. Have a great night. Thanks so much for your time. See ya.